again, I always talk, as I said, about mechanics, psychology, and purpose, because this isn't just about money. This is about people's past successes and future hopes and dreams, and their kids and what they want to achieve and accomplish. And so, I think I lean so hard into the meaning side of things, the purpose side of things, because I feel it in myself.
Thanks everybody for joining us. This is episode 4 of Building Better Portfolios. And Josh and I, your co-hosts, are very excited to welcome Jonathan Treussard to the podcast today. Jonathan and I have known each other for, I guess, a little over a year now. We had the opportunity to connect when I had first joined at Simplify, and we've gotten to know each other as friends as well. And I just think he's a wonderful human being, in addition to being in our industry, building better portfolios. Of course, we're going to talk about investments and portfolios and building an advisory practice. But I think Jonathan is also just a kind, genuine individual and has a lot of interesting takes on the industry. He also has his own podcast. So we'll talk a little bit about that. But Jonathan is the co-founder of his own firm, Treussard Capital Management, and has a really fascinating path that he's taken that has gotten him to this point of launching his own practice and business. And so, Jonathan, thanks for joining us today. Maybe we'll start off by just giving the audience a little bit of your path. And then I'll kind of dive into some of these parts. I want to talk about your time at Research Affiliates and kind of what led to you launching your own business. But where did you come from and how did you get here?
Well, thanks for having me. It's super exciting to be here. And I'll answer your question in full, which is basically some version of this is all a terrible mistake. But let me just get on the record, the one and only founder of Treussard Capital Management. So as I said, none of this was supposed to happen. Very, very simply put. I grew up in Paris. I thought I was going to be a musician, a professional musician. When I was 17 years old, I got my high school diploma, and basically I sat down my parents and I said to them, I bought a plane ticket to LA and I'm leaving in 2 weeks, which I did. Something about being 17 and not being totally keyed into, how big and crazy the world can be, which allows you to do fun things. Moved to LA very quickly. I literally stayed at a hostel, a youth hostel in Hollywood, which basically meant I was a Hollywood runaway. I just took a plane, not a bus, from Kansas. And I met a kid at that hostel who was, some version of 4 or 5 years older than I was. And so he was incredibly wise. And he said to me, well, if you want to stay in this country, you're going to need papers. And the way to do that is to go to community college. And so I duly took that advice. I went home. I applied to Santa Monica Community College, which I took incredibly seriously. Like I thought we were, this was going to be like serious admissions. I remember sending, music and like a CD, a burnt CD. This is 1998. With, some of my compositions, the whole thing. And believe it or not, I got into Santa Monica Community College, me and everybody else.
An elite group.
And an elite group of people with access to, the Postal Service. It turns out I loved studying and learning. And so I did very well at Santa Monica Community College. I ended up transferring to UCLA, which literally felt like a dream come true. In my first term, my first quarter at UCLA, by then it was very clear that I was, really into economics. And so I started taking economics courses at UCLA, and I took a course with Earl Thompson on, it was like a weird elective. I think it was labor and economics. It was either labor and economics or law and economics, one of the two. I can't remember which one I took first with Earl. And in walks this guy who's 20 minutes late to to class wearing sunglasses and cowboy boots and starts lecturing about why basically, most of what you learn in a textbook in economics is flawed. And here's how to really think about economic decision making. And I was just, I have a soft spot for people that question the status quo and the establishment. So of course, Earl was, kind of pulling on my heartstrings, and he became my mentor. I loved spending, hours with him over the course of my time at UCLA, and I thought I was going to be a professor. The truth is, I just wanted to be Earl Thompson, and so
with or without the cowboy boots.
Yeah. And the really cool Camaros.
That's awesome.
Earl drove the most incredible Camaros between his house in Hollywood and the UCLA campus. And so I applied for grad school. I wanted to be an econ prof. The same kid who literally told me, like, you should go get, you should go to community college for the student visa. Late at night, possibly, I will neither confirm nor deny, with some degree of intoxication, as I was applying to grad school, said, and I had this big algorithm. The algorithm was pick the cities you were willing to live in and apply to 2 schools. And so I had applied to UCLA and USC, and I had applied to, whatever, you name it. And the kid says, did you apply to BU? And I said, no. What's BU, basically? And he said, they're a private school in Boston. I'm sure they have money. And lo and behold, I applied to BU on the basis of this deep analysis. And I got into UCLA with no money. And I got into Boston University with a presidential fellowship. And so that was the first truly economic decision I made. I actually moved to Boston. To go to grad school.
It's amazing.
Because I had full rights. So that's how I got going. And, basically I drifted out of academia and into the financial services, which is how I started working for the Ziv family in risk management in the summer of 2008. And that's kind of the beginning.
And so one of the cool things that I think is cool, your time at BU, you had the opportunity to work with somebody pretty impressive, which would be Bob Merton. Is that correct?
Yeah. Again, I feel incredibly fortunate for the people that I've met along the way and the people that I've learned from. I mean, as I said, Earl Thompson changed my life forever by just training me in the way to think about economics. I got to be you. And again, I thought I was going to be a game theorist. That's kind of what, I love this kind of thinking about decision making and strategic decision making under uncertainty. And I walked into the business school in my second year, and I met a guy who said, everything you like about economics in the real world, we call it investing, we call it finance. Why don't you specialize in that? That was Tzvi Bodhi, of course, of the Bodhi Kane Marcus fame. And Tzvi became, my second mentor. He has since become a lot more. He's my father-in-law. Tzvi obviously had worked with Bob Merton forever in an academic capacity, writing papers together. They met at MIT back in the late 60s, early 70s, and by the time I hit the scene, which was kind of mid 2000s, Long-Term Capital had gone bust a couple of years prior. I think Bob had this desire to tackle kind of the big kind of societal questions, perhaps a bit of a redemption project. And so he and a couple of guys that launched this firm called Integrated Finance. And so I took Bob's course at Harvard, and was very quickly kind of invited to join Integrated Finance, which was cool. I mean, again, can you only imagine? I'm like some grad student making like zero money, and all of a sudden I'm taking the train down to New York to work at Rockefeller Center a couple of days a week. I mean, it felt big, and that was fun.
That's really cool. So you obviously have a lot of ties to the academia world, and maybe controversial question, but just to kind of get into it, I think there's been a lot of debate in recent years as to like whether these investment principles, whether we're talking about factor premia still hold, thinking about the way that we thought about, economics, supply demand, the way that things are measured. I mean, all of these like old school principles that have stood the test of time, the minute that they break down, everyone wants to call them into question. And so, I mean, just bigger picture, because of your appreciation of the academic world and some of those principles, and given your time, which we'll talk about at Research Affiliates, which is very much a factor-based firm, like how has your academic roots kind of informed your career path or helped guide your investment principles?
The short answer is, I think it's really important to have what Bob used to call long shelf life principles, things that, again, whether it's empirically driven or because they just make sense. Things you can hang on to for a really long time. But to have long shelf life principles and knowledge doesn't mean that you blindly believe that they're going to be applying, tick by tick, which just isn't the world that we live in. I think a lot of people just don't, and maybe this is where, there's a lot of gray. On the one hand, I'm a sincere believer that as we acquire more knowledge, then we ought to change our understanding of the world. So I don't want to come across as dogmatic in any way, shape, or form. On the other hand, I think a lot of people really don't hold any true beliefs. They're just kind of playing a part in the theater of whatever their life is, in the theater of managing money when it comes to the world that we're involved in. And so if you don't really have a clear sense of how you think about the world, and markets are designed to test your commitment to those principles, then of course you're going to change your mind, just because you're already starting from a place of instability, of lacking an intellectual baseline. And so that's the way I think about it. Look, I don't think data are sufficient. No, that's number one. I mean, I think people are like, I was a theorist at a time when, the kids rolling off of PhD programs were all empiricists. But I'm glad that I wasn't kind of in the mold, because like, great, congratulations, you got a CPU and access to, a database, you're going to be running regressions, you're going to be finding things. But if you don't actually have a mental model of how, like, why those things should be there or shouldn't be there or whatever, then like, I don't know what you make of any of that. And my suspicion is you're just creating trouble for yourself and making noise, for others. So, yeah, when I talk to people, I talk about the mechanics of investing, the psychology of investing, the purpose of investing. I think you can't do the first bit, the mechanics, if you're not grounded in things like, hey, how do markets work? And so I think it's a cheap way out to just kind of give up the moment it gets tough.
Yep. Yeah, I think it's super interesting just thinking about I feel like we're in a changing paradigm in regards to the investment landscape. And it's not to say that, what has worked in the past won't work any longer, but like you said, is being flexible, being able to evolve, being able to learn and look at things differently. I think that's where there's a lot of friction right now and how people kind of are thinking about their investment philosophies.
Hey, Jonathan, you mentioned something about kind of that gray. Was it difficult transitioning from kind of academia, where everything is for the most part black and white, to then like application, real world, where everything really is gray? What was that like?
Well, I would actually kind of take it in the other direction almost, because, and there's the old joke about, economists, on the one hand, on the other hand, right? So there's like, economists have a tendency to acknowledge the gray, perhaps to a fault. And I'm a huge believer in, I don't know. And there's more I don't know than I do know, by like a factor of 100. When you get to, a family office, a large family office, like I did in 2008, working for the Ziff family. I was hired by this wonderful guy, Alec Crawford, who was the head of risk, and actually, was very intentional about hiring 3 PhDs to kind of ramp up the the kind of the thinking processing, but also kind of training us in being true investment professionals, not academics. But when you get to actually being behind the money, if you will, and like all of a sudden you actually have to have opinions and all that, then you can't, it's, are we doing it? Or are we not doing it? Because all of a sudden you don't get to like, call for another seminar next week just to talk more about it. I joined on June 15, 2008, which of course was, 3 months before Lehman went under. And my first day on the job, Alec, who just hired me, said, the first couple of weeks, it's figure out how the computer works and where the kitchen is. And of course, within 2 hours, that idea that we had time to kind of on ramp had gone out the window, and we had to like do serious analysis about potentially hedging this risk and that risk and the other risk. So it is a transition, but I love that. I love the fact that when you're actually in the industry and you're not just looking at these questions from the outside, at some point, in the face of, if you're not a sociopath, you have a clear understanding that you don't know, but in the face of not knowing, you still have to make decisions, and I love that discipline.
Yeah, I think that's really important, and we talk a lot in this industry about like theory versus practice, academia versus the real world, and I think there is a place and an importance for both of them in the investment landscape. Like you said, Jonathan, is having that structure, having your process be rooted in beliefs and theory. And then at the end of the day, you have to act on it. And I think that's where like having that combination, because I've worked with a lot of people that have come solely from the academic world and have never actually had to put a dollar of capital to work. And then people likewise who are just, predisposed to put money to work that don't really have those beliefs that are rooted, and it's chaos on both sides. And so where those two kind of meet in the middle, I think, is where you have really strong investment processes and you're able to deliver for your clients.
Yeah, and it takes a long time. I think this is, something you wanted to talk about is, the fact that I got to a place where I decided it was time to launch my own firm. And it took, look, I started working for the Ziff family, which, was one of the most sophisticated family offices, certainly in the country at the time, possibly the world. I worked for the Ziff family for 6 years through the financial crisis. I then ended up working at Research Affiliates for a number of years, becoming a partner and all of that. And I know I was being facetious when I just said, if you're not a sociopath, like a minute ago, but like it is normal. It is perhaps even healthy to have a certain degree of whatever they call it, the imposter syndrome when you're young. And I might have taken it to an extreme where I used to think like adults knew things, when I've now come to realize they don't. But it took a long time for me to get to a place where I felt like I had acquired not only just the academic knowledge, which again, not a lot of people have a PhD in economics. It doesn't make me special, but it does mean I have a specialized set of knowledge, but also just the practical knowledge of doing this for real. This is why, I do as much writing as I do. I write this newsletter, Wealth Empowered. And as you noted, I have a podcast, Treussard Talks. But forget all of that. Before actually, I started thinking about doing my own thing, a few years before I launched a firm. And because, my view was, well, wanting to manage people's money does not give you the right to do it. My view was, first, let me kind of spell out how I think about capital markets. And I reached out to, once I had done that, and it was, pages, it was a little bit like a whatever you called it, a manifesto. It was very manifesto energy. And I said, I reached out to people that were, billion-dollar CIOs, and I said, please read this and do me the courtesy of calling me out, where you think I'm wrong. And I think that's the way to go about it, which is to be able to say, hey, let me articulate how I think about things, but I'm open to being wrong, particularly from people that you respect.
Yeah, and that's something I've always admired about you. I think you're very forthcoming and transparent and welcoming of feedback in a constructive, productive way. And I think that shows kind of the fact that you're very genuine, right? I don't think you have an ego to you. And I think that goes back to your comment on the imposter syndrome. And I think anybody that says they don't suffer from that is kidding themselves and lying outwardly. I mean, I get asked the question all the time is like, how do you do media things, or how do you go and speak to big audiences? And it's like, you just like have to think through it. Like, I get nervous. Everybody gets nervous. Josh and I interviewed someone else for our podcast recently, and they had just said every time they get on a podcast, even though they've been in the industry for 30 plus years, they still get nervous. And so having a bit of that humility, I think, opens you up to receive. And I think once you are open to receiving information, that's when you can continue to grow. So I think that's what also has probably made you quite successful, is you're constantly evaluating yourself and asking others to evaluate you as well. Let's transition and talk a little bit about Research Affiliates, because I'm sure many of those listening in are familiar with the firm. You were the head of product at Research Affiliates. Would you mind just sharing a little bit about like what you were doing in your time there, and kind of some big projects or initiatives that you helped kind of formulate or shape that helped kind of the firm broadly? Yeah.
So again, I was, very much an investment person, a risk person in New York. And for a host of reasons, including the fact that we had twin daughters in Brooklyn, and that I had gone to UCLA, I had this view that there had to be a better way. So I was, I kept kind of looking for a way back to California. And of course, I had friends and people that I knew at places at PIMCO. And because they knew me well enough to know that I was kind of this academically minded guy, they kept saying things like, well, probably not PIMCO, but they're like, what about Research Affiliates, this firm across the street that we worked very closely with at the time? And I believe this is still true, but now I've been gone for a couple of years. At the time, Research Affiliates was the only sub-advisor that PIMCO had ever used, which was a very special relationship. And so I ended up talking to the people at Research Affiliates about things like factor investing. And shockingly, even 10, 12 years ago, this was a far less commonplace topic than it is today. I remember we were talking about things like the betting against beta factor as like something that we had to like really dig in and understand. And so I ended up joining Research Affiliates, really without much of a mandate. It was more of one of those things where it was like, hey, you think about markets the way we think about markets, and we think we can use your skills, which is a really solid basis to move your family across the country for, particularly when you have, twin 2-year-olds.
Your wife's the same.
But yeah. And so we did, and it was great. It was fabulous. The truth is, I had incredible colleagues at Research Affiliates, people that I really respected, people that I've come to think of as lifelong friends. But again, it was one of those things where I didn't really have a job description. I learned about Research Affiliates by being at Research Affiliates, which I think is a wonderful testament to the culture, and particularly a culture that the person who ended up being my immediate boss and mentor, Katie Sherrod, was very intentional about. And very quickly it became basically, here is my cartoon version of the conversation we had. Hey, Jonathan, you've been here for 6 months. You don't really want to run regressions for the rest of your life, do you? And I said, no, I don't. And they said, seems like you might be helpful and reasonably competent on the business side of things, which I think is true. And so I ended up really starting from the ground up, the product management function, which I had it's not like I went to product management school. And so I kind of made it up, which I think is the right way to do it. I made it up so that it would be what Research Affiliates needed. And basically what again, my simple version of it was, in a firm where you have kind of nerdy quant researchers on one side of the shop, and on the other side of the shop, commercially minded salespeople, it's really helpful to have a function in the middle that is the internal advocate for, what's good for the firm here. Not what's just good for selling the thing today, or what's the thing that we need to research for the next 12 years. But like, again, kind of, we're a mission-oriented firm. We have a set of investment beliefs. I mean, I was one of the 3 co-authors on the investment beliefs piece that I think came out in 2014. Like, it's really helpful to be like, here's what we stand for. Here's what we're trying to achieve. And let's be the unit that keeps us honest when it comes to that. And so that was super fun. I ended up basically running, what I would describe as the business side of things, not the research side of things, and not the, business development side of things, but the business unit, trying to make good decisions on what to do with whom, where, at what price, that sort of thing. And again, I really enjoyed it. I became a partner. I worked directly for Katie Sherrod, who, is someone that I'm just, incredibly grateful that she's been a mentor to me all these years. She's now an advisor to, Treussard Capital Management. But I ended up negotiating, pretty big relationships in Europe and Australia, and learning what it means to be in the business of asset management. I was co-responsible for the European office, which, was where a lot of the assets under management reside. So it was just a fabulous, it kind of completed, again, the picture for me, because it did give me the confidence, the knowledge required to know how to run a business. And I would say the thing that I think I continue to go back to, and this is where being at Research Affiliates was a true gift, because RA is such a mission-oriented firm, and the mission is, I'm going to kind of simplify it, but basically to do things for the benefit of investors. It gave me a window on how many of the things that actually happen in the industry are not for the benefit of investors, which is why, I'm very skeptical and critical of product offerings that I think are not for the benefit of investors. And it helps me, as someone making investment decisions on behalf of people, to understand how the asset management ecosystem actually operates.
And we've talked a bit about that over the last year or so, just on all these new innovative, high-flying, exciting products that are coming to market. Some of them are innovative and some of them deserve a place on the shelf. Many of them probably do not. Many of them are probably creating a lot of noise. And I think, that's a big part of probably what drove you to want to launch your own firm, is like being able to be that filter, doing the right thing by your clients. And I would also say in your capacity at Research Affiliates in that role of product, because that's kind of where I've sat as well. You kind of straddle the sales and the investment side of the business, and the missing link is often communication. And that product role, a big part of that is making sure that you can communicate outwardly in and inwardly out. And so that both sides, it's almost like a language barrier. Like, you're the translator, because sales is out with the clients promising the world. And then you have everybody behind their computers that is not thinking about the ramifications or the client experience. They're just focused on their mandate, alpha, tracking or whatever it might be. So it's such an important role at any firm of any size, in my opinion, is somebody that can speak the language of both, client facing and investment management. So maybe that's a nice segue then to get into you launching your own firm. Like, obviously, this is a culmination of everything you've learned, the things that you've seen in the industry that you think you can do, not better, because that sounds like it's ego driven, but things that you wanted to improve on, things that you wanted to offer to investors. So like the impetus for launching your own firm, the process for that, I think that might be a good learning opportunity for a lot of people listening.
Yeah. And by the way, there's one question you asked earlier that I didn't answer about, projects and products that I was involved in. And I was recently reminded of a really cool, and I really mean it, I thought it was a fabulous product, a really cool commodity index that research affiliates designed and products were launched against it, in that kind of 2015 window. And I just went back to it recently, just kind of reminding myself of how the product was put together. I was like, that was a really good product. And by the way, it was met with deafening silence because of the when.
Yeah.
And I think there's a big lesson there, which is, hey, I don't know if anybody remembers, but 2015 was like pretty much like the worst year ever for commodity. And so you can have a great idea. And by the way, something that should, stand the test of time from an investment standpoint, but timing's everything, man. You literally couldn't convince people to put money to work in commodities then. And as we all know, ideas and products have a limited shelf life before they, it's like a house hitting the market and sitting there for 3 months. At some point, you just got to take it off the market. And so that's a lesson, right? Which is, it's not because a product is a success that it's good. And I think that's part of, bringing some degree of cynicism and knowing what to look for in a product. And I have opinions about things, like these, covered call ETFs that are just gobbling up assets and all of that. Like, great, they meet a demand, but are they good for investors? ? And then there are plenty of good products that just never kind of reach, escape velocity, and they die. And so that's the reality of it. And so I just wanted to share that story because I think it goes directly to why I do what I do today, which is it actually takes a reasonably sophisticated understanding of things to live in those trade-offs, which is, hey, they're kind of the do no harm products, and they're a pretty reasonable place to kind of ground yourself in because again, they have long shelf life principles behind them, and they have been around for a long time and will be around for a long time. And then the rest of the time, you're bombarded with ideas, and I'm going to assume, just perhaps out of simplicity, that half of them are good and half of them are just self-serving because somebody else out there is trying to sell you something, and your job is to decide which are which. And that's really important. That's what it means to be an advocate for your clients. Mm-hmm. And I mean, look, this is not a conversation about your employer, Paisley, but I think it's really important to be able to talk to people that are in the product provision world and to say, this one, I get it. This is good. This one, you'll never get me to put $1 to work in it. And that's okay.
Yep.
Like we're like, that's an honest place to operate from.
Yeah. Clear communication, transparency. I think that's something, especially working at a firm that has very complex new age products that are coming to market. To your point, there should be some skepticism around them. We should be asking questions. And if something doesn't make sense or it doesn't feel right, there's plenty of other ETFs in the sea, mutual funds out there, private funds out there that do resonate for your clients and their objectives, because everybody's a little bit different. So maybe then, as you thought about launching Treussard Capital Management, you said it was a multi-year process, which, as somebody who, I don't want to say I don't have an entrepreneurial bone in my body, there's probably a couple in there hiding somewhere. Like, the risk that you're taking on, like the ability to look forward and build that dream, I think is incredible. I'm always like so impressed by anybody who has that entrepreneurial spirit. What were some of the biggest obstacles for you as you got up and running?
The biggest obstacle is taking the first step, and again, I mean, we were joking about the fact that I have a family and all of that. And, there's some degree of like, well, this seems risky, but I'm like, hey, isn't everything risky? I mean, I don't know about you guys, but the idea that, receiving a paycheck every 2 weeks, like that doesn't seem completely risk-free. I certainly have experienced outcomes that didn't feel risk-free. But it's taking the first step, and then it's committing and believing. And so part of it was getting to a place of believing, right? Of saying, no. I have an understanding of capital markets that is sufficient to give me the, the belief in myself that, I can do things that are good for clients. And then on the business side of things, again, I don't think I would be doing this if it weren't for the experience that I had at Research Affiliates, $150 billion asset management business. And then it only gets easier. And it only gets easy. I remember, like, at the beginning, you have to hire a compliance consultant. And I remember, like, delaying by days, minutes and hours to cut that check because it felt like, crossing the Rubicon. And then all of a sudden you said, no, I'm actually committing. I'm committing my time. I'm committing my human capital. I'm committing money to this. And then you realize very quickly that every step leads to the next step, and every problem is a solution. And I really, and then you start doing the work, and you recognize, when someone says to you, well, that's different, that feels good. I mean, I guess different could be bad, but I interpret it as a compliment. A lot of what I do is, sure, I mean, there's, this is about managing money and having the knowledge and the refinement to do that well. But again, I always talk, as I said, about mechanics, psychology, and purpose, because this isn't just about money. This is about people's past successes and future hopes and dreams, and their kids and what they want to achieve and accomplish. And so, I think I lean so hard into the meaning side of things, the purpose side of things, because I feel it in myself. This is so much. I mean, what you said to me earlier, Paisley, about, authenticity and all that. To me, this is an exercise in self-actualization, that, like, if we're lucky, we get a shot at being who we really want to be in this lifetime. And so that's the way I'm approaching it. And I feel incredibly lucky that I'm doing it. I'm actually leaning really hard every day into, like, who am I, and how can I be, the most transparent, helpful version of myself.
Jonathan, can you talk to us a little bit about kind of the philosophy that you have at the firm that you started, and whether that's, some long-held principles or that have a long shelf life, or anything else? Like, I'd love to hear a little bit more about that.
Yeah, well, so you can't unlearn what you've learned, and so everything we talked about, the academic knowledge, and I've only ever worked at firms up to this point, right, where I had deep respect for the way the people around me were behaving. So I think ethics is a huge part of it. But also, I never worked at a place where I was like, well, I think they're wrong, but this is a paycheck, right? So, like, I've a lot of my investment beliefs, in fact, I would argue there's near perfect overlap between my investment beliefs and the way Research Affiliates would have talked about things in terms of, long range mean reversion, and again, the fact that there's this tug of war between what I would describe as efficient markets and behavioral forces. Rob Arnott has, just always talked about, the importance of being a contrarian and having the fortitude to go against, some of the excesses in the market. And of course, that's it's easy to do in some ways, and then in other ways, when the market is just screaming and you're like, no, we're just going to take it easy here. We're going to stick with it. Perhaps we're even going to be a little bit more aggressive now. That's hard to do. But again, I'm not running a strategy. I'm not running a fund. This isn't like a thing where it's like, hey, you're an LP. Like, this is very personal. Everybody has, a very specific portfolio that is tailored to kind of their circumstances and needs and preferences and all of that. And a big governing variable on that is risk. again, I started in risk management working for the Ziff family. So, I bring a lot of that to everything that I do. We start by talking about risk. We start by talking about downside. We measure it. We quantify it. We go back to it. We have scenarios. And why do I start with it? And people are like, why are you telling me about all the bad stuff? I haven't even opened the account yet. And I'm like, because if we talk about it now, if we get, and again, this is stuff I learned from Katie Sherrod, get all the yuck on the table early. Let's talk about all the yuck, right? Like, no one wants to contemplate the idea you're going to lose money. Guess what? You're going to lose money. There's going to be a moment where that happens. And so the more you talk about it when there's kind of no blood in the water, the better position you are to have a rational, logical conversation when it matters the most. So a lot of it is risk management. A lot of it is having having just as many uncomfortable conversations as humanly possible when the stakes are as low as possible. Yeah. To me, that's a big one, because I just said to someone this morning, and I say this to my clients, I never want to get to a place where you say to me, I didn't sign up for this.
Yep. And
so my job is to make sure that we really explore that, so that, obviously never is impossible, but that in the wide range of uncertainty that we all face, we stay connected. One of the things that I don't know where I learned it, though I'm sure I should be giving credit to someone, is this concept of, failure of decision making. And the failure of decision making happens when your brain is so messed up because of fear and loss or greed or whatever, that all of a sudden you're like, you completely bypass the brain and you say, I'm out. I'm not interested in having a conversation. So that's the way I do things.
Yeah, something that resonates with me that I talk about a lot in any capacity of our industry or any industry is setting expectation and then communicating ongoing. And I think to what you're saying right now is getting the yuck out up front. It's setting that expectation, and then it's communicating along the way, because things will evolve, things will change, new information will come to pass. And it's that communication element that, as you know now, both on the investment management side and then now as an advisor, communication is so important. You can have a bad quarter, you can have a bad year of performance, but if you're setting the expectation up front and communicating ongoing, 9 out of 10 times clients are going to be satisfied and understanding. So I'm sure that's a big part too of that, those conversations you're having today, sitting across from the table where it's actually someone's livelihood, versus in the investment management world, a lot of times we have that nice buffer where the decisions we make on a daily basis, we don't actually see how they might impact the end investor. And so it becomes really real for you sitting in the advisor capacity now.
Yeah, but again, it's kind of where I started my life, right? I mean, when you work in the family office world, the brothers were roaming the halls with us, which, by the way, was one of the most comforting things that I could come up with, right? In the middle of the financial crisis, where literally the world is melting, and you have these people, and you're like, oh yeah, the owners are the managers, and by the way, we talk, and so, but it's still their money.
Yep.
And by the way, we're talking about big P&L here, moves where you're like, holy smokes, and so, but yeah, I think it's I say to people, and look, I it might be a little overdone, but I hang on to a lot of one-liners because I think they just carry a lot of wisdom. And the truth is, in the heat of the moment where a lot of things kind of go out the window, the one-liner is going to stick around. And I say to people things like, your brain on money is a mess. And that's the reality. And so, but the funny thing about that, and again, I'm a student of behavioral finance, and the funny thing about that is that presents in an infinite number of ways, right? I refuse to talk about monthly performance. I think that's the worst thing you can do, right? Mm-hmm. But guess what? I did at the end of April, because I knew people were so anxious about everything that was going on that they probably didn't like, they couldn't possibly fathom that like the money they'd lost in the first 2 weeks, they'd made back in the back end of the month. And so I communicated monthly performance to all of my clients at the end of April. And like someone said to me, thanks, I was too afraid to look. And that's really important, right? That's like a very, like, your brain will really take you to strange places.
Yep, absolutely. So maybe in the interest of time, one other topic I wanted to bring up is the fact that you've recently launched a podcast as well, Treussard Talks. So give us the overview of what your podcast is all about, what types of guests do you have on, and where can our audience find your podcast to listen to it?
Sure. So Treussard Talks, I mean, I have conversations with people that I truly respect. They tend to have an academic bend, but not always. They're just thoughtful people that I also think are good people. But basically, again, we talk about these three things, right? We talk about the mechanics, the psychology, and the purpose of investing and of money, and explore that in a very kind of open format. This conversation has been very much on the investment side of things, but one of the conversations I had recently, which I think was so important, was with Jolene Godfrey. Jolene Godfrey has dedicated her professional life over the last 30 years, perhaps longer, to educating wealthy families in and addressing the challenges of raising financially fit kids growing up in abundance.
Yeah.
And Jolene is a gift. Jolene is a national treasure, right? So it wasn't hard for me to sit down with her for like 45 minutes or an hour to talk about what she's learned about, dealing with abundance. And it's really, really something that I think is very important to do. But I knew how important that conversation was because of something that, again, I witnessed 20 years ago. When I was getting my doctorate, I already knew Jolene, and so she invited me to some retreat that she had organized for, a bunch of teens, 16 to 19-year-olds in Santa Barbara. And these kids were all like kids of extraordinarily wealthy families, right? billion-dollar families. And I don't know about you, but when you don't have money, you presume, perhaps out of ignorance, that, if you're 16, 17, 18, and you have a bunch of money associated with your last name, you're probably walking around being like, life's pretty sweet. Yeah. And what I witnessed was kids who were so anxious and so worried about what money meant in the world, and where reality, the edges of reality. I mean, just the obvious stuff, like who's your friend, who's not your friend, whatever. But also, like, this was 2008, and like some kid was, just sobbing about how, his dad's real estate business was getting rocked by, but what was going on. And so again, to me, this is about leaning into humanity and trying to empower people with, the knowledge that I have, the knowledge that the people I know possess. And so that's what Treussard Talks is about, is just, God forbid we have something of value, we should share it, so that's Treussard Talks. It's all over the place, Apple Podcasts, Spotify, YouTube. Obviously, you can go to my website, sign up at Treussard.com, TREUSSARD.com. And importantly, again, I'm a huge believer in being authentic and sharing, my thoughts. If I'm going to be managing your money, you probably deserve to know how I think and what I think. And so that's my newsletter, Wealth Empowered, as well as the podcast. Yeah. And just a little plug, I would absolutely follow Jonathan on social media and listen to his podcast if you're not already, because he does communicate. He's very transparent. He gives, a lot of people props. I think you'll call stuff out when you see it and give props where it's due. And like I said, I think you're just a very genuine, authentic person. And that's why we wanted you on today. So thank you for joining us.
Hopefully maybe Josh and I will make it on your podcast at some point when we have something to add. But thanks for your time today, Jonathan. We really appreciate it.
It was wonderful. Thank you so much.
Hey, thanks, Jonathan.
The views and opinions expressed on this podcast are those of the host and do not reflect the views, opinions, or policies of any current or former employer, affiliated firm, or client. The content is provided for informational and entertainment purposes only and should not be considered investment, legal, or tax advice. Nothing discussed constitutes a recommendation to buy or sell any securities or investment products. Listeners should conduct their own research or consult with a qualified professional before making any financial decisions. The hosts are speaking solely in their personal capacities, and the podcast is not affiliated with, sponsored by, or endorsed by any firm or organization with which they may be associated.